Okay, guys, welcome to this week's weekly Fife Property update of the Fife Property market itself. We're looking at the number of properties coming to market from the 19th of June to the 25th of June, just yesterday. Now, this, as I said before, this gives a strong indication about where we are in terms of the numbers. We'll be looking at overall numbers in Fife up for sale as well. We'll be looking at some of the properties we've got coming soon and talking about them. A couple of articles we want to talk about, and then we'll finish off with instant valuation tool. Okay, let's get cracking on. If you've got any questions to ask, please feel free to ask them. If I can answer them on air, I will answer them. If I can answer them off air, I'll answer them later on, or you can message us direct or get in touch with us through the usual channels. Anyway, let's crack on and look at the number of properties that actually come to market versus the number of properties actually sold. Supply and demand. These two economic factors which indicate to us whether we should be in a declining market, a stable market, or a booming market. Okay, so let's get this up on the screen. So right across Fife last week, you can see in the Cooper area, 8 properties came to market. 6 properties went under offer and sold. East Neuk 7 versus 7, still a stable market. St Andrews 8 versus 6, quite stable as well. Leavenmouth 4 came onto market. 13 sold. Now last week, there's a lot of properties came on in Leavenmouth, and subsequently there was a lot more supply than there was demand. And this week it's balanced it out. Remember what I told about swings and roundabouts? Dunfermline 66 properties come to market, 57 overall sold. Glenorchy's 10 and 10, so that's a stable market. Kirkcaldy 35 versus 28, again, supply bumping up there. So you can see supply actually increasing in the Dunfermline, Kirkcaldy areas, and that's predominantly west of Fife tends to have a lot more because there's a lot more building going on. So a lot of people are actually selling to move into new build properties. Kirkcaldy, for example, out in the Randolph, across from the Randolph Industrial Estate, you've got about 1,000 houses getting built out there, or the new builds out there. I think it's Persimmon that's actually building them, and possibly Barrett as well, I think, as I was passing. Try to remember the boards that were outside. So that gives a strong indication. Overall, 138 properties came to market, 127 properties sold. This is quite an interesting one because I'm going to stop sharing and I'm actually going to jump on and look at Zoopla. To give you a good indication about where we are right now, to tell you if we're in a stable market or not, because this actually doesn't tell you just as a snapshot with 1 week. Now, predominantly what we found is during, I'll get this a new screen up here and be able to share it, during the period of the months, predominantly there's been about 550 properties on the market for sale at any one point in time, actually available for sale. And that has been quite like that for quite a long time. So I'm going to jump on here and show you what Zoopla's telling us right now. Hopefully you'll be able to see that. Yep, I could see that. And we'll jump on Zoopla. There's Zoopla right there. And we'll jump on here. So here's Zoopla's website, and we'll type in Fife. And as I said, we should be looking for about 550. Any more than that, if it's significantly more, we're kind of realizing that there's a lot more properties coming to market, which means the market's stabilizing a bit. And I could show you right in here. Yeah, 629 properties. You can see that right there, that figure there. So 629 properties available for sale at this point in time. Generally, it's been under 600 for a long time, so we can see a lot more properties coming to market. If that stays at that figure, we are moving up towards more supply. Good, strong indicators suggest that the market will be stabilizing. Now, one of the most important things I could tell you here, and I'll stop sharing that screen, and I'll jump back onto the other screen. One of the most important things I can tell you here is we did a show the other week, and we talked about the supply and demand issue. But we also talked about, the show was actually about, talked about last week, the shifting Fife property market. Now, I can put that in the comments here, this article, and so that's in the comments for you there. That's going on all the pages. And this is about the Fife property market on average on the verge of the tipping point. Now, we're going to be updating that this week with another show to reinforce that, to give you more information about where the market is going in terms of Fife itself. To be honest, it's where the market's going in terms of the UK and Scotland itself as well. What we're doing is we generally look at the whole of the UK, the whole of Scotland, and we also just put a wee bit of level of detail in there to make it personal to the Fife area. But in actual fact, it's really reflective of the whole of the UK market itself. So this shifting Fife property market, or the shifting property market, it's on the verge of the tipping point. The rate of house price growth has started to ease, with a reduction in the number of properties that will sell in Fife in the coming 12 to 18 months. So that means, reduction in number of properties coming to sell. That's why it's gone up to 629, because there's more supply. There's less properties selling than there usually is. So a wee bit less demand. That's due to two of the reasons that's due to is possibly inflationary pressure and also increasing interest rates, and with the thought process. I didn't want to say fear, because that's generally what the media peddles, for want of a better word. That would possibly be it. That the way they make people imagine that possibly they might not be able to afford the house. Interestingly enough, actually, the banks have just announced, it was in the Guardian the other day, I was actually reading an article online, and it actually said that they've taken away the income criteria. In other words, there's no income requirements anymore to get a mortgage. That's going to be an interesting one. That almost seems like we're going back to the level of possibly the 2007 era, where we're not actually assessing people's income levels. They're convinced that there's other things affecting that, and they're convinced there's other things affecting that. It will be in place in order to protect anyone that is actually borrowing. I've yet to see. I'll be interested to find out where this goes, and I'll keep an eye on that and keep you updated about that as well, because it's an interesting statement from the banks and the mortgage broker. I suspect it's just to drum up business, because they see a decline in mortgage market. So therefore, what can we do to be able to get more mortgages in people's hands? After all, the banks are in the business of lending money. They're not there to help people. They're there to lend money to you in order for them to survive and make money. That's what it comes down to. They're there to sell you a mortgage, and they're there to also get people's money in, so they can fund that through getting savings in order to lend it out at a higher rate, and possibly lend that same money almost 10 times over to 10 other people. When you put your money in a savings account, they immediately take your money and say to someone else, would you like to borrow that at a higher rate? That's how they make their money. So the banks want to continue to do that, so they'll do anything possible to keep lending within reason, and they will take into account what the government says as the guidelines or the legislation surrounding how they can lend and how much they can lend. So the more leeway they're given, the more opportunistic they'll get. I'd be interested to know your thoughts on that. Stick something in the comments if you want to comment on that statement, but I think that's what they're on. I mean, the market, the property market is on the cusp of a tipping point. The tipping point that will influence house prices, the number of properties available to buy, the demand for properties, and the lives of every homeowner and property owning buy-to-let landlords in the whole of the UK. The shift in the property market and the Fife property market is a big deal. So I'm going on in this article, on this in the comments here, to explain exactly what that means. The two vital reasons why there's a shift in the property market, these three signs of the shift in the property market itself, and also how inflation and how interest rates will affect the property market overall. So that's a really good show that we did the other week with Perry and myself. So tune into that. You could also click on that link and listen to the podcast as well. And you can actually just read the article. The article literally takes 33 minutes. Sorry, 30 seconds. 3 minutes to read, literally. And that's me. I'm a slow reader. Okay, so that's that article. Let me get to some of the properties. Let's quickly talk about another article there, actually. Perfect portfolios, maximising the value of your magnetism of your rental homes. We did that show yesterday, Richard and I and Charlotte, and that goes into the detail about the buy-to-let and continuous occupation of high-quality tenants for a lead of a market leading income and value increases year on year. Now, the reason that we do a lot of investment shows and a lot of buy-to-let shows and property investment and all the rest of it and wealth creation shows is because there's a lot of money people have in the bank. They're not making enough returns, and this is giving you alternative opportunities possibly to invest in other markets, which will make a significantly better return. I must say, investments can go up as well as down. However, I've been in the market for years as a buy-to-let investor, as a property investor for over 30 years, and it's never failed me yet. Touch wood. Desk or here. whatever. So we'll go into detail on that as well. And again, you can click on that. You can watch the show. You can listen to the podcast. And you can just read the article. The article will take you 4 minutes to read. Let's talk about what's been sold, what's coming to market, and what's finally over the line and what it actually went for. Gives you a good indication about prices that are getting achieved and where valuations will be when it comes to do your home report when you come to sell, because that is the evidence that the surveyor uses to get the valuation of your property. Because if we sell the exact same property like yours next door for a certain amount of money, when he comes to do the survey for the home report and the valuation, if it's almost within a month or a week, then he'll be saying, well, literally, that's the same valuation. It's the valuation of what you just sold for. Now, give or take, because remember, that sale was agreed potentially 6 months before. So there should be an uplift in that. And that's when we talk to the surveyor and discuss it with them about other properties that are on the market just now and comparable, and then suggest possibly we come to a mutual agreement about where we think the valuation is. So it's all quite scientific and logical and structured in terms of the valuation process. Okay, let's talk about what's actually over the line. Let me just jump back here. Sold this week. If you were hoping to get King Edward Street in Markinch, it is away. It's been sold. It was sold within the month, and it was a 1-bedroom upper apartment, and it was listed at offers over £80,000. Yes, a 1-bedroom apartment in Markinch. Its ex-local authority is now going for offers over £80,000. So that gives you a strong indication, if you've got a property like this, what the valuation would be if you were to come to market, and potentially how much more you can get. I cannot tell you what it went for until the keys are handed over and it's exchanged, or that would be unethical, because then you would know what somebody else is paying for it and potentially possibility to gazump. Yes, it can happen. Okay, Hawfield Gardens is away. It's sold in 2 weeks in Kenaway, a 3-bedroom semi-detached house, and it was listed at offers over 150,000. Yes, a 3-bedroom semi-detached house in Kenaway in Hawfield Gardens is actually selling for offers over 150,000. Again, these I could say with confidence that every single one of these went for over. So it gives you a good indication about the market is still stable, buoyant, and all the rest of it. But again, watch that show I spoke about in the beginning. We have Erskine Street in Buckhaven, sold in 3 weeks, 4-bedroom semi-detached house. And that was listed at offers of 160,000. That's away as well. 19 Wade Terrace in Anstruther. Well, no surprise there. 1-bedroom bungalow, and it was offers over 150,000, and it went within 2 days. Literally, as soon as I put a pre-portal on this, there was inquiries already, and people wanted to offer. And eventually, in 2 days, an agreement was discussed and finalised and accepted. So that's under offer. It offers over 150,000 for a 1-bedroom bungalow in Anstruther. And finally, as well, Glebe sold within 1 month. That's the 2-bedroom detached house, and well, it's really a detached bungalow. That upstairs is an attic with a couple of windows either side, but it has great potential to put a stairway in and actually put 2 bedrooms and a bathroom upstairs as well, like most of the properties in that area have actually done. And that was listed at offers over 250,000, and that is now away within a month. That got a huge amount of activity in the first place, and it was just finalising. More importantly, it was all about the entry date and being flexible and accommodating to make that happen. Price was important, but the entry date was just important. And that's what can get you over the line in discussing the offer for a house. It's not all about price sometimes. It's more important as well. It's about the entry date and how flexible you are to allow the next person to actually find their dream home next and what accommodates for them. So it's building that chain and making sure that happens for your for the buyer, for the seller, for the buyer, for the seller in that chain process. I spoke about that briefly the other day, 2 days ago, in a 5-minute vlog to talk about what chain building is and how we do it and what you can do to get the house of your dreams before anyone else. Okay, So coming soon, let's talk about that. Coming soon, watch out for Commercial Road in Ladybank, a 3-bedroom detached house. Myerside Gardens in Kennaway, a 3-bedroom semi-detached house. Ardan and Leiden, 3-bedroom mid-terraced house. The Grove in High Street, Strathkinnis, a 6-bedroom detached house. Montgomery Road in Grail, I did a pre-portal just the other day. It was a 4-bedroom bungalow with 3 receptions, a swimming pool, a sauna, and it was on roughly about 0.75 acres with a double garage as well at the beginning. Great potential. If you saw that pre-portal, that'll be getting uploaded soon. So that was coming soon as well. That's just at pre-portal stage. So if you're interested in that one as well, jump in quick. Completed over the line. Let me talk about the completed over the line. This is keys handed over. I can now tell you what these properties went for to give you an idea about where the market is. High Street Methil is a commercial unit actually sold, and it's sold for slightly over the home report value. So the new owner is delighted, looking forward to their new commercial business venture. Randolph Street in Buckhaven, 2-bedroom ground floor apartment, sold in 3 weeks over the home report value. It's sold for around about 5% more over the home report value. We go on to Main Street in Methil Hill, 2-bedroom semi-detached house, sold within 1 week for 10% over the home report value. So that gives you an idea about Main Street in Methil Hill, how much 2-bedroom semi-detached houses are going for. It went for 120,000 when the keys were handed over. Curling Pond Court in Cooper, a 2-bedroom detached bungalow, that sold on social media. That was an offer the seller could not refuse, and it wasn't surprising. It went for 25% over the home report value, that was represented about £50,000 extra. Who wouldn't want that? Okay, new owners delighted with their new property. It's exactly the home that they want for themselves. Ryan Road in Glenorchy. This was actually quite an interesting one, Ryan Road in Glenorchy. This was actually on the market with another agent, and within probably 1 or 2 months, they were getting no inquiries at all. They were getting no one through the door. I think they possibly had an offer, but it wasn't something the seller was enthusiastic about. He really lost faith in the estate agent himself, and then actually switched over to us when we had been out as well, and he decided to go with the other person. He came back to us and he says, look, I've kind of had a second thoughts. I want to go with you now. I've given notice to the other agent. Came over to us. It was sold. We sold it with a closing date and 6 other people missed out. This was after it came off another agent who didn't really get that many inquiries. We actually sold it for a closing date, and it was sold for 17.5% over the home report value. 17.5%. So that's what a 3-bedroom terraced house in Ryan Road in Glenorchy is going for. New owners delighted with a new family home. Wealth creation show tomorrow. Watch out for that. Richard and I will be talking about all things creation of wealth. We're going to talk about the subject tomorrow. I'm not going to give you too much details now, but tune in at 12:30. We will be live. We'll be able to take your questions. Crypto market's bombed. Property market's still really good and stable, still a great investment. Gold, silver, all these different things we'll be talking about at 12:30 live tomorrow on these channels. So tune in at that time, and you could ask your questions about the subjects that we are talking about, and you could maybe introduce some of the subjects and we could talk about them as well. So that's a Wealth Creation Show. Richard and I will be talking about that at 12:30 tomorrow. If you want to watch the back episodes, there's a link on here to our Facebook page for any episodes that I have on my public profile. But ideally, you want to click on the YouTube playlist. It's on here. So there's a playlist on here for the YouTube channel, which will actually give you the information for that playlist itself. I'll just quickly finish off and say to you, the instant valuation tool is on here again. It's always on here. It gives you a good, strong indication about the valuation of your home. You can click on that. You can put your details in. It literally takes 30 seconds. Put your details in. Find out the valuation of your home. You'll get top, middle, and bottom. You'll also, for landlords or investors, if you're looking at a property to rent and you possibly see one's up for sale and you're thinking about, I wonder if I should buy that, Well, that'll give you 3 different rental valuations of what that property could achieve. And then you could plug these numbers into our spreadsheet, which we discuss in our wealth creation show, and that'll give you a good indication about where the key indicators are, where your risk analysis is, and where your sensitivity analysis is, to ensure that if there's any swings in the economic situation, like interest rates go up, occupancy rates go down, your rent goes down because rent controls come in, then you're still hedged against that, and therefore your investment is safe as houses. That's why they call it safe as houses. Money invested in the right properties. That's what it comes down to. Okay, that's it, guys. If you've got any more comments, please feel free to put them in the comments themselves. And until tomorrow, 12:30 for the Wealth Creation Show, I'll see you then. Bye-bye for now.